Hi, I'm Josh Denbo. I am a consumer protection attorney. I represent people in foreclosure. I sue car dealerships. I bring federal suits against banks and mortgage servicers. My career is helping people in financial problems, and I love my job. I really do. So, this is the first in a series of videos I'm going to do about the most common types of mortgage servicing fraud and abuse that I've seen in my career, which has been a fair amount of time. If you find this topic useful, or you want to find more information about consumer protection, how to save your house, how to protect yourself from debt collectors, please subscribe. It really helps, and you're going to find a ton of information coming out in the next couple of months. All right, so this is the first in a series of videos, and there's probably going to be 5 or 6 of them at least, depending on how much interest I get and what people need to hear in order to protect themselves. So the first one is called the frequent flyer program. And that is an inside the industry term. It happens enough that the industry actually has a name for it, which is more than a little irritating. So we got to start in the basics. We're talking about homes. We're talking about homes that have mortgages on them. We're talking about people who have fallen behind on their mortgages. And we're talking about banks trying to collect on houses. How people protect their homes is often through a modification. I'm sure everybody knows what a mortgage modification is. And in general, mortgage modification comes in basically 3 steps. First, you apply. Second, once you qualify, you're given the trial period plan, also known as the TPP or the trial modification agreement. The point is, it's a document you receive. You have to send 3 payments in on time. Sometimes you have to return something signed. But once you make those 3 payments, you get a final modification agreement that you have to sign and send the payment in. And once that's done, the loan is modified. Now, a modified loan is not a new loan. It's the existing loan. You just change the terms. And you've taken a defaulted loan and turned it into a current loan. For example, if you're 2 years back on your mortgage payments, their bank is about to foreclose. They agree to a modification. Everything goes through. You do your trial payments. You do your final modification payment, and you send the signature back. The bank logs in their system the final modification, and however the terms have been adjusted to take care of the 2 years in delinquency, the 2 years in delinquency are gone. You still are going to pay them, but you're going to pay them back in a different way that you can afford, and the loan is current. Since a foreclosure is an action to enforce a defaulted debt, when you modify a loan to bring it current, there's no default. You're current. They can't file a foreclosure complaint. So that's why the modification is so important. And the mortgage servicing industry, as everybody knows, is made up of hedge funds and big banks and all kinds of high finance nonsense in the background. And it involves often sales of the loan from investor to investor to investor, and changes in servicing of the loan, meaning the company that collects your payments, from whenever the loan is transferred in the ownership, and sometimes the owners themselves switch servicers, so you switch servicers quite often. Here's what happens, and here's the cause of this particular mortgage servicing fraud. If you're into a modification trial payment plan, or they agreed to send you a trial payment plan, or you've paid all 3 payments and you're about to pay the final mod and the servicing changes, many times the borrower is going to get a letter from the new servicer that says, if you'd like to modify your loan, please apply. Many attorneys, I would say most attorneys, look at that and say, oh, I guess we need to apply with a new servicer. No. N-O. The new servicer is bound by contract law and by federal law governing mortgage servicers to abide by all of the agreements made by the predecessor servicer. If Servicer 1 agrees to modify the loan and then doesn't actually log the final modification to bring the loan current before the servicing is transferred, the new servicer has taken on a loan that is not in default. This loan is not in default. This is a current loan. The new servicer cannot ding your credit. They cannot pursue a foreclosure complaint. They cannot sell your house because your loan has been modified. It gets more insidious and more problematic when the servicing transfer happens during the 3 trial period plan payments. If your servicing transfer happens after the final agreement is signed, just about everybody knows is, wait, I'm current, go away. But if the servicing transfer happens during the 3 trial period plan payments, many people don't draw the conclusion that they have a right to enforce that contract. But under federal law and under most state laws, you have every right to enforce that contract. And that contract is, if I make my 3 payments, you, new servicer, have to give me the final modification I qualified for under the old servicer. And I don't care what you and your new investors' guidelines are. Doesn't matter if your guidelines wouldn't give me a mod, I'm entitled to a modification under the old servicer, and you can't make me apply again. It is a huge, huge, huge problem. Not because it happens to everybody, not because it happens every day. Well, it happens every day. Not because it happens on every single modification. But there are so many modifications, so many loans, so many servicing transfers, and so much chaos in the industry right now. If I don't see this fact pattern at least once a week, I'm surprised. And every time I see that fact pattern, I'm like, awesome. This is a great case. I can't wait to dive into this one. Just today, or actually just yesterday, I got a case. In 2016, my now client modified the loan, made the 3 payments. Before the 3 payments were over, the new servicer came in and took over. The final modification, actually I take it back. After his 3 period payments were made, and after he'd received the final modification agreement, after he'd signed it and notarized it and sent it back, the servicing changed. But the old servicer had never logged the final agreement. So he was current. His loan was current. The new servicer didn't see it that way. But they were just so out of step, careless, stupid. They just kept accepting his payments. He made this deal in August of 2016. The loan changed hands 6 times over the next 3 years. Servicing changed, I don't even know how many times, at least 6 times. And he made payments every month until January of 2019. 2019. That's the date he made his last payment. And he didn't make February of 2019 because the servicer at that point refused to accept the payment, saying he was in default. He wasn't. They filed foreclosure. Attorney handling the case didn't understand all the parameters here, but they reached out to me. I'm now co-counseling the matter. My client is going to keep his house and probably collect money at the same time. That's one example. Happened yesterday. It's top of mind for me. Everybody. If there's a fundamental concept you need to understand. If you enter into a contract with a bank, you're allowed to enforce that contract just as the bank is allowed to enforce the contract you made with them to pay them back, which they're doing in the foreclosure case. Your rights under the law are no different than the bank's rights under the law for the purposes of contract. Sorry, nerded out there for a while, and I got a little deeper than people probably want to hear. So if you watch this far, bottom line is, if you think you're getting screwed by a bank, you probably are. If you have a trial modification or a modification and you don't think your bank is honoring it because they're saying all kinds of stupid things, they're probably not honoring it. And if they're not honoring it, you probably have a claim. And I don't mean a claim to defend your case and save your house. I mean a claim to do that and to sue the bank for damages, attorney's fees, and other relief. All right? You know, I hope this video gets out. I hope people watch it because it is going to save homes. All right? Be strong, people. Fight back. Be smart. Ask me any questions you got. I'll do my best to help. All right?